here's a chart for Acadia Pharmaceuticals. I'll explain these indicators on the screen here, but first what I want to do is show you a little bit under the hood of this approach. Now, I'm going to type in the symbol here. We'll open up our market tree, and you can see we can go into Acadia Pharmaceutical here within our healthcare sector. I'll go ahead and right-click, open up Properties, and we can view what is referred to as the intermarkets. So these are the 25 to 30 most closely related markets that we know affect, drive, and influence, in this example, the price of Acadia Pharmaceutical. So for every a market that's forecasted for, there's a unique set of intermarkets that have been identified to have that significant relationship to that target market that we're essentially forecasting for. Now, when you look through these, you really understand why this is so important. Look at this ETF, the iShares Biotechnology ETF. Power shares the Qs. You got the Japanese yen, the dollar index, crude oil, the major indices markets, treasuries, individual stocks, financial stocks, healthcare stocks, technology stocks. Now, what one of those patents that the VantagePoint software, what we've applied for one of those patents, received one of those patents for, is identifying which one of those markets or which of these markets share those important market relationships. Now, the great thing about this technology of neural networks is it's able to scan huge amounts of data and find those important relationships. Now, the reality, though, is some of these are positive correlations. Some of these are negative correlations. Some markets lead or lag other markets. There's so much data and information there that simply, imagine every day sitting down and having to look through 25 more charts to figure out how you're going to trade the one market that you want to take a trade on. It's simply not practical and simply not possible, really when you look at the technology and the amount of data that really needs to go into this. So, this is how we are essentially utilizing this data to get a tremendous edge in, how we are making decisions every single day in the market. Now, the other patent, there being two on the technology, analyzing the effect of every single one of those relationships. So how strong is that market affecting or driving the one that you need to be trading that day? Now, here we have the chart here for Acadia, and actually what's great about the software as well is because, we analyze so much data, we can apply this technology to so many markets, regardless of what you trade here, you can apply this approach. So if you're in the energies, we got the light sweet crude, the indices, the E-mini S&P, we've got over 30 currency pairs, which imagine when you're trying to go, for example, last week I took a trade short British pound Australian dollar, right? Now, when you need to make that trade, you can't just think about the British pound, you can't just think about the US dollar, you've also got to think about the Australian dollar. So to trade any currency cross pair, think about how effective it is to have a tool that's analyzing all the other currencies, all the other ETFs that model the Australian dollar, the British pound. These are simply the things that most traders just are completely ignoring in the market, and it really leaves them with a real blind spot in their trading. But so regardless, you got the ETFs, you also have the stocks. Just literally thousands of markets for you to go ahead and trade depending on where you are in the market. But I see I get a couple questions here, but let me go ahead. I want to explain everything on this chart. So as we go through, looking at different ETFs, looking at these confirming markets, I want to make sure that everyone clearly understands how to interpret what they see on this screen. Now, if you look at the top portion of the chart here, just against the price data, now these are daily bars and candles. This software, what it does is it waits for all the global markets to close down, crunches all that data, and generates a new forecast for the next trading day. But all of these are daily bars and candles, and you have a blue line and you have a black line against that price data there. Now, the black line on your screen is a regular moving average. Now, that's what's called a simple moving average. It's a lagging indicator. All it is taking the last 5 or 10, 15 close prices, averaging them together, and then it will always plot that line. Now, that value is, it's only based on past prices, and additionally, it's only based on the past prices of the one market that you're looking at. So that information, is completely absorbed by the market, known information, and it's simply always going to be reacting to where the market is, going to start going, but it doesn't change until the market's already, made its move, essentially. Now, the blue line on your screen, that is VantagePoint's proprietary predicted moving average. Now, what's happening there is to plot the value of that line, and I don't like to think of it just as moving average. I really like to think of it a value, because to plot the value of that blue line, it's not only looking at the past prices of Acadia Pharmaceuticals, but looking at all those 25 to 30 market relationships. Looking at how the markets are leading other markets, lagging other markets, sharing correlations, and it's plotting that line forward, predicting where the moving average is expected to go. So this is essentially forecast of saying, look, here's where prices are expected to move. And so if we ever have a situation where our predicted moving average crosses above or below our lagging indicator, it's essentially indicating that there is a type of trend change there, and therefore an opportunity for us as traders. So what we essentially want to look for are these crossovers in the software, because they represent essentially fresh opportunities, a trend change, meaning that we can get in on that move on the early part of it. If we get in too late, it really changes the risk reward. And so that's the benefit of these predicted moving averages. They're not going to really lag behind the market like a lot of other tools, and they're often going to be able to react and keep you in trades when you need to hold out during times of volatility, so that you'll still understand that, look, the overall direction of the market is either up or down, and you can be confident in making your trades in that direction. So as long as the blue line crosses above the black line, it's saying, look, direction up. We talked about those two things, timing and direction. Well, here's what we're talking about here as far as direction. So as long as the blue line stays above the black line, the direction of the market is still up, and you'd want to go ahead and hold that position. So you see here that after the blue line crossed above the black line, 61% move in Acadia Pharmaceutical, but as soon as the blue line crosses below the black line, getting a pretty aggressive decline here in the market. Let's see here, about 12-13% drop once the blue line crossed below the black line. So that's what's going to help you with your overall direction. It's going to help you get into markets earlier, but then also really understand when to hold out during times of volatility. Because certainly right here, guys, early on in this trade, you don't want to be getting out of the market because things may look weak a little intraday. That blue line is still above the black line, saying, look, direction still up, go ahead, hold on to your position. Now, that's very straightforward. Blue line over black line, because the software is consistently accurate and quite robust in what it's doing, we don't need to make things overcomplicated. We don't need 5 or 6 different indicators that are really confusing the issue here. But if we move down to the bottom of the screen here, we see we have this. This is what's called the predicted neural index. Now, this indicator is either a 1 or a 0. You see it's either one or the other. 1, 0 goes up to a 1, down to 0 here. Guys, this is what helps traders with their timing, and this is so key, that what this indicator is really effective at doing is forecasting short-term strength or weakness in the market, essentially trying to forecast whether average prices will be higher or lower 2 candles in the future, 48 hours into the future. So as a trader, this is great because I can identify what direction I want to trade the market and essentially know, look, do I want to be a buyer or a seller in this market over the next couple of days? If I'm a trend trader, how I like to use this is a throttle. When that neural index is bullish and I'm long the market, that's when I want to be adding to my position. When it's down at a 0, I want to be more cautious, possibly even tightening up stops and being defensive. But when everything's confirming itself, when everything's in agreement, that's when you know you have a good opportunity. So when you see these crossovers occur like we did here, and the neural index is up at a 1, at the same time confirming that move higher, it's saying, look, over the next couple of trading days, look to go ahead and get involved with this market, and as long as that blue line, as long as that direction remains up, stay in the trade. And so look at this more closely here. We're going to go through some more charts here, but this is what I love about this is direction up over this time period, right? Neural index up to a 1. Well, look at the rally that you get over that time period there. In just 7 trading days, the market moved up about 29%. You see, neural index drops down to a 0 here. We get a little short-term weakness, but direction is still up. So all you're doing, waiting for that neural index to pop up to a 1. Again, looking to go long. Another nice move over just a couple trading days. So there's that strength, that short-term strength coming into the market. Neural index down to a 0. Direction still up. It's still saying the direction up, but not a lot for you there. You don't want to be aggressively getting long a market that's essentially running flat, has that short-term weakness. Now, when we go to the downside, it's completely the opposite, guys. Cross over to the downside, Well, now neural index, very, very weak over this time period here where you're getting this aggressive decline in the market. And so, guys, this is what it's all about. If you have tools that are consistent at doing something in the market, we're able to forecast these short-term prices up to 86% accuracy. If you simply, trade in line with the forecast, use the world leader of forecasting, what we've been doing for 25 years here, use this technology to your advantage. It's going to have you heavier on positions when you want to be long and lighter on positions when you don't want to be long, and also, short when the direction is clearly to the downside. So a lot of traders out there don't have the confidence to go ahead and short the market. That's simply because they don't have the tools to help them understand, where they should expect the market to trade. So again here, cross over the upside. I mean, this is just keeping these things very, very simple of, look at all this confirmation saying short-term strength up and up and up. If you get into this trade, hold on to that market. And we see that, just over, not too much time here, again, 36% move higher there in Cadia Pharmaceuticals. So, that's one example of how we utilize the software, how the software works. You see, it's very straightforward, and I can't stress this enough that that is the point. When you have something that's consistently accurate, is really robust in what what it's performing for you every single day, you don't need 5 or 6 different indicators that are all telling you the same thing or things that are always in conflict. You want something that clearly signifies that, look, you've got a high probability here. Here's the direction you want to trade the market. Here's the timing, and so you're going to know exactly what to expect as that market trades forward, whether you're a short-term trader or whether you're a long-term trader. So, I mean, guys, did you understand what I explained there? I mean, does this seem like something you can do? I mean, literally, if in the evening, looking for these crossovers, a blue line crossing black line, blue line crossing below line, making sure you have that confirmation. If you can go ahead and think you can manage those couple of steps there, go ahead, type yes into the box, and we'll go ahead and move on here. But I want to show you how we can then utilize the technology and then these other markets, regardless of, if you're trading in the ETF groups, if you're trading in the individual shares, how you're going to be able to say, hey, look, that's the market I want to trade. That's where I should focus my attention and not getting all, really confused by looking at way too many trades or too many different indicators that aren't really giving you what you want. So let me go ahead. Here's Cadia Pharmaceuticals. I want to actually bring up, I have some ETFs opened up here on the bottom and explain a couple of principles. Now, when you understand how the technology works, you really understand that, look, it's doing a lot of this analysis for you. It's looking at those market relationships, analyzing those leads and lags, and forecasting the market so that you can make your trading decisions off of that forecast. But, if you're looking at the ETF groups, which are also doing this type of analysis, so that when we forecast for the biotechnology ETF here, it's looking at the then 25 to 30 markets that are known to affect, those, that individual ETF. So we can use this to get even more confirmation on our individual stock trades, so that when we're looking to trade something like Cadia Pharmaceutical here, we certainly want to look at the biotechnology spider, because what we see here will help us, really have more confidence with those trading decisions. We see at the same period here, and this is what I love to get at here. If we look really closely here, when these crossovers came through, this predicted moving average crossed above, the blue line crosses below the black line, or above the black line here, signaling a trend change. We're getting exactly the same thing here, right, with the Cadia Pharmaceutical. Cross over to the upside, neural index up at a 1. Does everybody see that? So, but look what happens here. The blue line remains above the black line. We never get a cross to the downside there, signaling what? The trend is still up. Direction-wise, you want to be long the market here for any of these pharmaceutical companies, or if you're trading the biotechnology spider. The neural index is down at a 0 here, and you see you get this short-term weakness. But the blue line and the black line are even starting to separate before the market picks up, and you're getting that move higher. I mean, I can't stress this enough, guys. When you have a tool that isn't just, going back and forth, very inconsistent with how it, is really analyzing these markets, it's going to help you hold on during times of volatility where a lot of traders just get kicked out of the market and don't make any money, maybe even lose money when they should be making money. So that'll help you with that direction. And you see how effective this is, of not, not simply following the price down, but actually getting more and more bullish while prices are going lower. And once you get all that confirmation, again, this whole sector doing well, the ETF sector doing well, and then on the downside, look at all this short-term weakness from the Neural Index. Saying, look, short-term weakness, you get that crossover really confirming, look, go ahead, take some profit in the trade, and look for the next opportunity. Look for those crossovers, which I'll actually go ahead and show you how you can have all these crossovers. There's a scanning feature. Have all these crossovers presented to you really first thing right out of the gate. A couple clicks of the mouse, you see exactly, hey, where should I be paying attention? Where should I go ahead and deploy my capital? Same thing here in the Semiconductor ETF. Going a little bit more recently, I want to show some recent moves and even some things that I'm involved in. We look here, we got these semiconductors trades here. So blue line here in the Semiconductor ETF. See, holding below the black line, till about right here. Neural Index strongly at a 1, cross over the upside saying, look, the semiconductors look good. Look for those crossovers in that sector and within the technologies. 9 to a 10% move just in the ETF. Well, look what's happening over the same time period. Cypress Semiconductor, crossovers to the upside. Look how strong that Neural Index is over that time period. So far, we'll see how the market trades today, up 15%. So, imagine a $9 a share stock, $9 or $10 a share stock. How many shares of that could you buy? And so far in literally 11 trading days, the market's already moved up $144 a share. So a couple of thousand shares, you're already up a few $1,000s. Even if you're a smaller trader, even a few hundred shares is going to be a pretty significant amount of money to make here with very small risk on only a $10 stock. Same thing with a Taiwan Semiconductor. So all these crossovers, all these scans, they come in at the same time, guys. So, you're going to be presented with all these opportunities that say, look, here's where you want to go ahead and focus your attention, and you can get a lot of confirmation because look how strong the Semiconductor ETF is. So it's analyzing all those market relationships, looking at other technology stocks, looking at other ETF pairs, looking at the currencies, looking at the yen, the Nikkei, and saying, look, direction is up, short-term strength is up. Look for these types of opportunities in the individual shares where you can even go ahead and make a lot more money. A couple dollars a share there on a $20 stock, and you see that these markets are still blue line above black line moving higher. So you can go ahead, lock in your stops because your timing was excellent. You get that good timing, you can lock in your stops at break even, trail your stops as that market moves higher, and it really decreases it. It takes a lot of the risk out of these types of opportunities. So a couple of opportunities, and I don't like to get too much into this. Every trader has to make their own trading decisions and do their own thing. But I trade the markets every day. I utilize this software to identify every single opportunity I take. Here was the last opportunity I was in. There's actually these two here. Doesn't get much more clear than this, guys, right? So what we just discussed, blue line crosses below the black line, saying, look, go ahead, look to short the market. Neural Index, very, very weak over this time period. But guys, it's not just just the crossovers in the Neural Index. I'm going to show you this next part that is my favorite part. Aside from that, VantagePoint gives you a predicted high and predicted low for the next trading day, so that when you have to decide, hey, what price level should I be accepting? Where should I look for prices to move? Whether that's trying to hit a target or trying to get a dip to go ahead and buy or sell whatever shares you're looking at. I can go ahead and touch my keyboard here, and what I want to show you here is here's our prediction for day, predicted high and low level. You get those every single day before the trading day, but you can see how accurate these levels are, moving forward as you need to make these trading decisions. So when you need to come in and short this market, it's telling you, look, try to short up here around $8.20, $8 a share, and simply as long as that blue line remains below the black line, riding that trend lower. So really nice opportunity to the short side, about 17%, got the better part of that one, and then also Jable here more recently. And if I weren't in these markets, and these are like literally, I just want to show you exactly how this works day to day. every single night you're going to scan for these crossovers, find these opportunities. You're going to, have, not too many. I mean, we're going to show you how you're able to sort through all this, but identify where you want to go ahead and pay your attention, where you want to go ahead and deploy your capital. And again, same approach, saying direction up, short-term strength up. Where do I want to get in over the next couple of trading days? Well, we want to use those great levels that the VantagePoint software provides, weighing all those intermarket relationships and saying, look, if you want to buy this thing, look for these dips down here to about 17.20 a share, and away we go over the past several days, about 14% in 12 trading days. Talked about the Australian dollar. Here's Aussie US, crossover to the downside. It looks painfully easy, but it's because you have a software that is consistently accurate at what it does. It's going to help you make better trading decisions so that you can do what you need to do as a better trader, right? Hold on to your winners and cut your losers short. So when you know what to expect in the market, that can make an unbelievable difference for, really your confidence and really the anxiety you have throughout the day when you already know exactly what to expect. Here, as clear as day, Australian dollar, 497 pip, crossover to crossover, and we see that when these crossovers come through, these predicted highs and lows are extremely accurate, because this is exactly when you want to be getting those really nice levels to short at as far as those intraday levels, and you see the complete bottom drops out over this whole time period. And a couple of days ago, talked about this opportunity ending, but that just means a new opportunity is beginning. And just over the past couple of days here in Aussie US, I don't know where we're at now. We're up to 74 something, but already a great opportunity to go ahead, get into that market, trail your stops, take some profit along the way, and make some money with these opportunities. Now, I spoke to you guys really briefly about scanning for these opportunities. Now, this is pretty simple, guys. I mean, do you think that in the evening, based on the markets that you're trading, that you could look through, however many charts you need to look through and find these opportunities, find these crossovers and say, okay, I can identify that says direction, and that's my short-term strength, and at least have a better idea of what you should, how you should trade a market. Does this look like something that you guys can do? Go ahead and let me know in the question box there, and then we'll go ahead and move on to a feature that's really going to cut down all the time you guys are going to need to do this. I trade everything, and because you can trade the markets exactly the same way using this approach. So what I do is at 6 p.m., all the software downloads all the data, right? And you get all of these forecasts. I scan through just the futures and the Forex for me in the evening because I want to spend time with my girlfriend when she gets off work. So I do that. It takes about 10 minutes. I see everything that I need to see. I can put orders in. Then I'm a real early bird. I get up early in the mornings, I make my coffee, and for about 30 minutes, I scan through literally hundreds of markets, find exactly what I want to trade that day. But I'm not in the market every single day, intraday trading, staring at live charts all day. To me, it's quite ridiculous to even do it that way. There's a much better way to do it, and imagine, really being selective, finding a few great trades, really trend trades to take a week, and you're going to hold on to those for maybe 3, 4, 5, 6 weeks at a time. Well, guys, you're going to have plenty of action in the market. You're going to have plenty of opportunities and be able to really build a portfolio where these positions, whether long or short, are moving in your favor and really protecting your capital from market risk, but getting you in on these phenomenal opportunities like I showed you here. Let me go ahead and I want to show you the scanning feature because, like I said, I spend maybe 30 or 40 minutes on, we're talking maybe close to 1,000 markets, counting the futures and the Forex and all the stocks that I look at. Depending on what you're trading, this may take you, 10, 15 minutes a night. If you just trade the futures or the Forex, it only takes me 10 minutes. If you're trading the stocks, maybe about 20, 25 minutes, you're going to have your orders already in, ready to go. But what I want to show you guys is this scanning feature, which is really phenomenal here. Now, I've got the entire healthcare sector open here. I've gone and created a portfolio. You can organize your portfolios however you like, guys. So if you have maybe trade options, so you want really liquid option markets, you can just put those all in a portfolio that you like to trade. But I have these split up by sector because you'll also notice that you get these big sector rotations all at the same time. And that can really direct your attention to, hey, should I be paying attention to the pharmaceuticals? Should I be paying attention to technology? What should I be doing today? So we've got quite a few stocks opened up here. You can see, you can view pretty much all these healthcare companies that we've opened up. But I want to show you the scanning feature here. So go ahead, we'll focus on this top side of the chart here. We can go ahead and set these conditions to identify those crossovers for us. So we can go ahead and set this to a value of 1 because we want to see those fresh opportunities where you've just gotten those recent crossovers. Depending on if you're long or short, you can go ahead and set these conditions to, again, up in the case of wanting to take a long position, and also the neural index. We can go ahead and set that to a value of 1, and we can see that, in just about, a few minutes, and you can actually save these portfolios. So as soon as you open it, it's scanned for exactly you want to see. But we can go ahead and identify these new crossovers, these new opportunities where there may be trades that we want to go ahead and take. So remember, guys, when you have the stocks, the best part about this is that you're going to scan through each sector, maybe fill up a portfolio with 200 or 300 markets, but then be looking for those markets with those clean crossovers where the neural index and the crossovers are matching, and that'll represent where you want to go ahead and focus your attention. We see not a whole lot coming through healthcare today. 108 scanned, only 2 of them coming through, so you may want to go ahead and click through other sectors and find those opportunities. So this will save you a ton of time, but more importantly, make sure that you're trading in line with the forecast. Make sure that you're getting long when you need to get long, and really improving your timing when you need to go ahead and make those decisions.